Financial markets in May performed a little bit better. Some of the uncertainty that we saw in the first quarter has dissipated a bit, and markets, particularly equities, seem to respond a little bit more to some of the good earnings releases that we've seen. It hasn't all been smooth sailing in recent weeks. In particular, Italian politics has been very much at the forefront. The conflict between the president and the leaders of the populist parties translated into a pretty sharp increase in Italian government bond yields. Happily, what might have turned into quite a meaningful crisis appears to have been relatively short-lived. We now have a government in Italy, bond yields have come back down, but the underlying question about how these parties will govern, the populist agenda that they might put forward, and broader questions around stability in the Eurozone still have to be answered. It may not be an immediate risk, but it's certainly something to keep in the back of our minds. Trade has emerged again in recent weeks as a potential risk to global markets, with the US looking set to put tariffs on steel and aluminium coming from a range of countries. In general, higher tariffs over time translates into lower economic growth and potentially higher inflation, which would broadly be negative for financial markets. So far, we probably haven't seen enough to get too concerned, but we are conscious that if we see a round after round of retaliation on a broader range of goods over a range of countries, then this potentially could begin to impact on global growth and on financial market sentiment. One area of focus in recent months has been the labour market, particularly in the US. And what we've seen is that unemployment has fallen to very low levels, but wage growth has still remained relatively muted. What we've seen though most recently is that we've seen a little bit of an acceleration in wage growth. Now on the one hand, that's generally a good thing. It's a sign of a strong economy, households feel a little bit better off, but from a financial markets perspective, it does raise a couple of concerns, particularly around the possibility for accelerating inflation and the need for the US Federal Reserve perhaps to tighten monetary policy more aggressively. Now, so far, we haven't seen anything to make us too concerned. Wage growth has picked up a little bit, but inflation expectations still remain relatively well anchored. Nonetheless, it is something that we're going to be focusing on in the coming weeks and months.